Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Spinoffs, M&A, and earnings. That is the theme of today's show. We've got a lot or a few of each. A couple of M&A headlines, one spinoff headline, and a lot of earnings. Most of them from this morning, but a handful from yesterday afternoon. So we'll cover as many of those as we can. Our guest at 8:35 will be Bill Studebaker. He is the CIO at ROBO Global, and he's going to talk to us about a pair. They have three ETFs. Two of them have done exceptionally well this year, robotics ETFs. One of them is a robotics healthcare ETF. So we'll talk about how COVID has sort of impacted that sphere at 8:35. Want to remind everyone to hit the like button, hit the subscribe button. We appreciate any and all likes. And now I will throw it to Joel. And Joel, tell me how hard we bought the dip last night, because I bet you we bought it pretty hard.
It was actually old Dennis. It started when he came on the show yesterday afternoon at like 3:55. He put in 722.5 buy orders and pushed up the market on the close. Strong close, followed through this morning. Pre-market low 33.90. That's right there near the close at 93.50. So we'll see if we get that low. I don't know if we're going to. Knocking on the door of the pre-market high. 34.10 to your pre-market high. Folks, I got nothing for you there. So that's not going to be the high of the day. Next target on the upside, 29.50. That was the intraday high from yesterday. Crude in that trading range, got into the 38 handle yesterday, trying to rally up 30 cents at 38.86. Gold in the red by 80 cents, man. This thing is always at 1905. I think it's just stuck there. Look at the chart on that one. That is winding up. Silver up 90, almost a dime, 9 cents here at 24.51. And don't look now, Bitcoin fans, up $400 at $13,445. Look at Bitcoin.
Yeah.
Dennis, were you out there buying some?
I want to buy Bitcoin. You guys never told me where to buy it, how to do it. I should have just bought GBTC just like Jason.
I know.
Not worried about the spread, not worried about the premium that I'm paying for the product. Just buy it because it's going up. 20,000. I don't know. I don't understand it, but I'm not going to argue with the technicals. I think it's going higher.
Maybe I'll dig up.
I'd be a buyer of pullbacks if I was a crypto trader.
You know what? I'm going to get a crypto guest on next week. Who's our favorite crypto guest?
Get that. Who's the big crypto guy? Well, we also have Mark Yusko, who's good too. But Mark's got his partner there that he does something with. Who's the guy? You know the big name.
His name is Andrew, and someone with an A, right? Andrew Anthony. Yeah, I know.
Pompey. What's his name?
Pompey. Yeah, not Pompeo, but it's something like
that's something like that.
No,
Spencer, where you at with getting Yusko on?
Pompey.
I haven't gotten Mark on yet, but I'm working on it.
Did you send any emails yet? What's going on?
No, I would do it today.
You could have said yes, because you know I don't look at my email, and you could have said that you did. Right. But anyways, just before we get talking about the markets, Triple D, how I'm always willing to say, make these 100, range bets like 35.08, 33.08. You know what? The high and the low for the week may be in. I think we're going to grind this week. I think unless you get some.
It was a pretty wild day yesterday. It's not that much of a bold call, to be honest. Yeah. You're right in the middle here.
Yep.
Dip was bought.
Yep.
Dip was bought. Pretty much right when I came back.
Yeah. And it's going to be like a day off for me and Spencer having you on the show. But
I'm quiet here this morning.
Yeah,
I got it all out last night. I'm pretty sleepy this morning. Tired. Okay. A little bit, just tired. One of those tired Tuesday mornings after a long weekend there.
Dennis, his name is Anthony Pompliano. That's his name.
Pompliano.
Nice.
Let's get him on there.
Reach out to Anthony.
I've talked to him on Twitter before. He seems like a nice guy. Let's get him on.
All right, we're gonna let Spencer run the show, so we actually cover more than 3 stocks.
Oh, wow. All right. Didn't realize that was going to happen. Okay.
Boom.
Let's go to this AMD Xilinx story. So this was not new news, right? It was reported a few weeks ago.
Yeah, but everybody forgot about it.
But now official is the difference. So AMD is going to buy Xilinx. They announced this in their earnings report, which they also have out this morning. And the ratio, so it's going to be an all-stock transaction.
I love all stock transactions.
I know you do.
Right, we're ready.
Valued
Pen's ready for the ratio.
Valued at $35 billion. Here's the ratio. Is 1.7234 shares.
Holy, that's a lot of numbers there.
Yeah.
1.7234. They can't make it simple and just go like 2 to 1.
1.7234 shares of AMD for every share of Xilinx.
1.7234.
And they did the math for you. So they said it comes out to $143 a share.
At AMD's closing price.
Yep.
AMD got smacked because that's what they do on the all-stock deals. They smack them down, but then they decide, you know what, we don't mind this deal. And they've bought AMD all the way back up. AMD also reported earnings, which they weren't supposed to report till tonight, but they decided that they would report along with announcing this merger. So give us those details as well.
Yep. EPS beat 41 cents versus 35 cents. Sales also beat 2.8 versus $2.5 billion. They also beat on their Q4 sales guidance. 2.9 billion to 3.1 billion is the range they gave for sales for the current quarter versus a $2.6 billion estimate. So they beat on all fronts to go with this M&A this morning.
Whoever sold it at 76 this morning when this deal got announced doesn't listen to the pre-market prep show. It's not sell the dip, it's buy the dip. So I hope some of our traders were out there buying the dip on AMD this morning because they are instantly rewarded. It is almost back to scratch. The stock getting all of its losses from the 6 a.m. hour back. Yeah, believe me, this was down $6. This was down $6 this morning on a deal that we kind of already knew about. Crazy. Free money, unless you sold. Then it's free losses.
I don't know. I don't know why they would whack it down.
Well, they do. I know why they whack it down because that's what the algos do. They see a big stock deal. They're like, oh, we hit the acquire on the all stock deals. And, in this case, we kind of already knew about it, though. They already got smacked around a bit on it. We knew it was kicking around. It wasn't official, but we knew this was kicking around. There's no reason that this should have been down, 8-9% this morning on this, 8%.
I'll just take the close. I'll just use your closing price. This is going to be a wild one, down 38 cents, but that close from yesterday, 82.33. It did spike over yesterday's high, 85. If we go into major rally mode, I look for that resistance. And if you come down to 80, that 80, what was yesterday's low? Yesterday's low was...
The low of the move 78.42 from 3 days ago, but I think now that you've come back and now you have sellers remorse on everybody who sold it this morning, I think you're going to see buyers. I think they're applauding the deal to a certain extent. It's actually, usually you would think it'd be down a couple of bucks, so I think it might have overshot here to get back to scratch. So I wouldn't be buying it now. The easy money was made, when you were buying at 76, 77, 78, because that was an overshoot. I feel like 80, 81, but in this case, it's come all the way back. So it could go. It could continue to go. You don't know. But I'd say here it's coin flip.
Tough. So, it's a tough stock, I think, to intraday trade anyways. The Xilinx, how did the street fall asleep on this one, Dennis?
Came all the way in. I fell asleep on this one too, because remember my strategy always was, I've talked about that one for years. The rumors come out, let the thing come in and try to fill the gap. Come back in and let people forget about the rumors. And then sometimes you have a free, call option really at it if you buy the stock, because there's still the deal was kicking around. And in this case, this stock got down to $111. So, and obviously 129 now. It didn't fill the gap entirely, but it gave back a good 2/3, three-quarters of that gain. So if we would have been looking at it, if I would have looked back at this, and the Xilinx is not one that I trade regularly, I might have struck.
Yeah, and it's higher than the original price. Remember, you thought it was trading at a premium.
It was rumors, yeah.
Yeah, with the original, and now the deal. Well, it all depends where A&D ends up, but right now, trading at 130, and that's considerably above. So people that bought that day, took some heat, but are being rewarded here. So keep on, xilinx, keep your eye on that ratio if you're a spread trader.
And I think to Spinner's point in the Benzinga chat,
Yeah.
the fact that AMD also came out and reported earnings and raised their guidance when they weren't supposed to, right? It was supposed to be after the close today, so that's probably helping here because they would have come out with that number anyway. But the fact that it's now at the same time as the M&A headline probably just
there's an earnings wild card in here, and that is a good point too. I believe the earnings actually came out the exact same time though. So they came out with the earnings pretty much at the exact same time as the deal was announced, and they did beat, but it's not a blowaway by any means. 41 cents versus 35.
Yeah,
like if you take those numbers and you didn't have a deal on the table, you'd say, well, they're pretty good, but I don't think you're rallying hard on those numbers. So I would say that this deal got overshot on the downside. Now it's coming back. Maybe it's overshot, but there is the wild card of the earnings in here. But they're kind of just, they're in this market, a beat isn't enough. Like we've seen stocks. There's a lot of stocks this morning that announced beats by 6 cents or by 10-15%, and they're down. So you usually got to kick them. You got to hit them pretty good here usually, but. So it's hard to just say this is just coming back because of the earnings. I would just say this is coming back because it should have never been down at 76. And now people who are selling are down there like, oops.
All right. Existential question of the day. If a company called Las Vegas Sands does not have any business in Las Vegas, can it still be called Las Vegas Sands?
Yeah, that's a good question. Give us this headline here because this is just, this goes to show these news algos, just get crazy. And this got crazy on the headline too.
Yeah, I'm seeing $55, but anyway,
it traded up to $55.
Yeah. Bloomberg
I tried to short it. It was really fast.
Bloomberg reported this overnight that Las Vegas Sands, Sheldon Adelson, the majority owner, is looking to potentially consolidate his holdings and exit their Las Vegas operations and focus mostly on Asia. And so they're trying to sell the various properties they have in Vegas, potentially for as much as $6 billion.
Multiple thoughts here. I put some of them on Twitter last night. One, there's absolutely no reason to buy a stock up 12% last night, up to $55, when they are trying to liquidate, one of their, if not their biggest assets in a fire sale. And that's what it would be right now, because think about who's buying a casino right now. Who's going to Vegas and buying a casino? One, I see this kind of, and the circumstances might change because this was, obviously a good property. But right now with COVID, you're just got to be selling at the bottom. If you find a buyer, it's going to be at a fire sale price, and it's probably not going to be $6 billion. It's probably even going to be a lot less than you want to sell it for. So just because you have intentions to sell doesn't mean you're going to find a buyer. And second thing, if you're needing to sell, why are you needing to sell so much? Are you in that much trouble here? And we know the casinos are in a world of pain with COVID. So I don't think it's actually that good of news. And the market's still trading it up 2.5%, but I don't see this as a positive headline for the company. Just my opinion.
Yeah, Vegas. Boy, oh boy, that's tough. That pop. $55. You just had to have your order out to get.
Yeah,
that.
It was gone. The algos got, oh yeah, maybe they misread and said that they were selling. They thought they were selling the whole company or something. I was seeing the stock go, and I was like, is that it? It's up 12% because they're exploring a sale of their Las Vegas property. That sounds crazy, but.
How many do they have?
The market today with AT&T too and DirecTV, they popped it up ridiculously.
How's AT&T doing? Just revisionist history. I know.
Yeah, it gives it back. We talked about this on the earnings
nice
pop.
Call. Nice triple D.
28 and change. We're like, this is another selling opportunity. Oh, look, it gave back $1 yesterday. You know what? AT&T path of least resistance lower.
Yeah, boom. All right, next.
I
can't even. You want numbers on LVS? I don't know. This thing, it's like the eternal $50 stock, right?
It's waiting to get out of COVID. They want clarity one way or another. Is this COVID thing going to get a lot worse? Because then this is all just reopening. There's nothing more ground zero than casinos. The virus continues to spread, and we start to get into a point where we got to start shutting stuff down again. The casino stocks are going to get killed. So if we get to a point where we got a vaccine coming, we're not scared of it, and we don't have to shut anything down, eventually maybe you see some people start going back to casino. But do you want to go to casino and pull, a slot machine, or do you want to go to casino and roll the dice? Oh yeah, here, blow on these dice for me. Okay,
You know
let's
what?
give them a roll.
I mean, did you like to go to casinos even before this?
That's not me though. There's a lot of people who like to
I
go
know.
to
I mean, with the
casinos.
markets, I mean, I'm not saying the market's a casino, but I mean, I like to roll the dice, and that's because I used to do it with my dad.
I liked it too, but are you going there and rolling the dice and blowing on the dice and then let them go? I don't want to touch those dice.
No, not
What are they
anymore.
going to do? Dump them in some hand sanitizer, or it's a bucket of sanitizer every time, and then somebody reaches in there and rolls. Doesn't sound like a lot of fun.
What was the news on 3 days ago, 4 days, when you had that gap and go in Las Vegas Sands? Was that
Good question?
That was an upgrade?
That was earnings.
Oh, they had earnings.
Okay.
How are the earnings? They lost 74 cents, supposed to only lose 59, and 586 million versus 700. So they missed, but apparently that was still okay because they didn't lose as much money as they thought they were going to lose. So somehow they made that a positive event. I think the 55 was a gift. I think the 54 was a gift. I think the 53 price was a gift.
Yeah,
I think the 52 is a gift. I think the 51 price is a gift, and I'm going to go as far to say I think the $50.40 is trading at right now is a gift. So I am just not a fan of this whatsoever. It's telling me they're in a world of pain for a long time when they have to consider selling their Las Vegas property, and the market is saying this is a bullish thing. I think the market is wrong, and you know what? Efficient market hypothesis, wrong here as well.
Properties.
My opinion, just my opinion.
They own the Venetian, the Palazzo, and the Sands Expo Convention Center. So it's properties.
What about the Dunes? Who owns the Dunes now?
I don't know. Wynn?
It's gone.
No,
Dunes.
What's Wynn doing on this?
I don't know.
It's up slightly. Anyways, Wynn, MGM, casinos. It's tough. The reopening trade is tough right now. It's going to come back. It'll bounce, chop around. Fade trade. Selling rips, buying dips.
Wake me up when it's at 46.10. There was a quad top there. You gapped and go. That's why I get interested on the buy side.
Okay, just the last one of these M&A / spinoff headlines before we go really hard.
Another rant coming on.
Yeah, and we'll do AIG quickly, just because they announced yesterday. They announced a bunch of things, but one of them, the main thing, is they're going to spin off their life and retirement business. And so you can see the stock up 6% this morning. So essentially doing what IBM just did.
It went up over 10 or 11%. That was what my tweet was too. You could see what IBM did on that news, that they were potentially going to spin something off.
Oh, yeah.
Break up. Yeah, they bought the thing from 126 up to 140 in the pre-market that day. It took 3 days before it gave it all back. And now you can see where the stock is just destroyed. Gilead, this obviously nothing to do with the spinoff, but when you have these dogs popping up on headlines that aren't even going to make you much money, you got to think twice about buying those pops. And in the case of Gilead, we said it on Friday. I said I think this is a selling opportunity. I think the stock goes lower. Gilead has now obviously given all those gains back in one day. I had somebody asking me on Twitter, why did it go down? We talked about this on the show the day before. I predicted that it would give it all back, and it did. I didn't know it was going to do it in one day. It did. And I'm going to go as far to say now on Gilead that now you have a whole new group of traders. So I guess I did go on tangent. You have a whole new group of traders caught long this thing. All those who's like, remdesivir, it's the therapy. It's been approved. We got to buy. In one day, those people are all stuck too. Everybody is caught in this thing. It's like a 7-year low for the stock. Everybody is in pain. Any type of a rally, they hit the bid. Just like they did on Friday, they hit the bid. They hit the bid yesterday. I think Gilead's going to go down to $50. That's my target on it now. I have no position, but I think the stock now can actually, it's starting to take out that $60 area. And I think that, all the good news, what's coming? What's the good news coming for Gilead? Remdesivir just got approved. You tell me the catalyst is going to drive Gilead back up. 4.5% dividend. Woo. That's not very good when your stock falls 10% a year. So you know what? I actually would sell this stock if I owned it. And I'm almost tempted to go short it. That's how much I don't like Gilead. No position here, but I am bearish Gilead.
Okay, back to AIG though.
Okay, back to AIG, same story. I would sell the pop, and actually I'm short the stock on AIG. Right. So I tweeted out last night, and I decided, you know what, I'm going to short it. So I did short after I tweeted it last night, and I shorted up just a little higher than here. I didn't get the 34.30. I tried to get 34.20 and then 34, and then I forgot about it. I came back, and I think I got like 33.60, just above here. So I'm in from right around here. So I'm short it. I'm going to try to hold on to this one. We'll see if I can hold on to it. But I think this one in a couple days could give it all back as well. Just my opinion.
Just hanging out. I mean, hanging out here. What's is it thick right now? 23,000 have traded.
Oh, very thick.
Yeah.
AIG, very thick. Yeah, it's been trading here for pretty much the entire after-hour
yeah,
session.
look at that. Yeah,
settled in.
He's got this thing. I don't know. I mean, maybe if you're looking to hold it for more than a day, Dennis, then the top of yesterday's range would be a really good spot to cover. I'd go $32. Yesterday's high, 31.91. Don't even worry about the gap fill. Just get in there at 32. On the upside, this is a pretty thick stock. I haven't looked at I haven't looked at this thing in so long, man. This used to be a Bright. This used to be a hot rod. Remember? We used to trade this thing.
I don't remember AIG ever being a hot rod, but I remember trading it.
It was 80, 90, $100, and it would move. Yeah. It would move.
That was before the split. Before the reverse 20 for 1 split, or 1 for 20, or 1 for 10, or whatever it was. I think it was 1 for 20. Wasn't it 1 for 20 after the financial crisis?
I can't remember, but it was one of those stocks. If the specialists like flash trip 9s on it or something, you knew you were going to have some fun. Either trip 9s.
You knew some volatility was in store.
If trip 9s on the bid, you knew it's going on. Trip 9s on the offer.
I remember that. I remember the trip 9s. They lock her down. Trip 9s means the whole world's selling. There's nobody buying.
Yeah.
Where are we gapping to? And then that was setting up for a big gap, and a gap down like $2 or something because they were selling. They had a big fish out there wanting out. You know what? The big fish that wanted out back then was right, because what is the all-time high on AIG? And I just want to, this is a story of not investing in dogs for the long term. What's the AIG all-time high? Go bring up that long-term chart, Joel. And you got to go back to the financial crisis, because obviously this company almost went to zero.
You have to go back to the .com bubble, I think.
I can go here.
Probably the financial crisis. So you got to go further.
All right.
You got $500 there, but it's higher. Keep going.
I know.
Big money. No. Oh, look, it's going higher. 1,400. Keep going. Oh, you're right. We got to go back to before you got it right. We got to go back to the .com. But look, over $2,000 a share. So if you took your money and invested in AIG because it had a cool dividend of like 2% back then, 20 years ago, you're now down, what is that, 95% on your investment 20 years later? Dog of all dogs. Do I want to invest my money in AIG? Hell no. Because you know why? Because this is what's done to you. And why is today going to be the day that AIG turns it all around? Why is today going to be the day? You know what? I'm betting it's not going to be the day. And that's why I took a short position.
Okay.
All right. Speaking of fading, of selling rips, fading pops, whatever you want to call it, AMD is up this morning on heavy volume. Because I'm not AMD.
AMD is up now. Look, AMD doing great.
Look at you, Spencer.
AMD is up on heavy volume. It's all true.
Look at Spencer.
Now you giving it
Spencer's just he's typing in orders, and then he had AMD on his.
I've done that before.
In his contact.
I was off by a letter. I meant AMD.
I've done that before. Be off by a letter, and I buy the wrong stock. And I was
Spencer,
like,
where are you getting out? Where are you getting out, Spencer?
I bought the wrong stock.
AMC is up.
AMC's up.
Heavy volume, yeah.
Are they not going bankrupt?
I was off by a letter. I'm sorry, because they are reopening a bunch of movie theaters in Northern California this weekend.
Really?
Yeah, that's awesome.
So, what are they showing? Towering Inferno?
Oh my god,
that was not good. I'd strike that. That was bad.
Inferno.
That was bad.
Towering Inferno of a stock price. We'll give you that. It was $7 back in May. It's $2 here today. They're teetering on bankruptcy. We know that they've talked about bankruptcy. Is bankruptcy coming? Maybe. We know stocks necessarily don't go to zero in bankruptcy, but I'm not coming in here and betting on a turnaround story anytime soon for AMC.
A little pop up here. It's up 14 cents, 289. What, $3? What? If you guys want numbers on this one,
low of the move. Give them the low of the move. 266. Below 266 is good support at 0.
And if you 315 to double top, backed up by 313, there's probably 8 zillion to sell at $3. So that's my look on AMC.
All right, we should go to some earnings here. It's 8:25. We'll have Bill Studebaker on in 10 minutes. You want to do TWLO from yesterday?
Yeah, this thing's kind of quiet, huh?
It
Yeah.
chopped around though. Give us the earnings numbers. It did chop around a lot.
Good numbers on the headline. Q3 adjusted EPS of 4 cents versus a 3-cent loss estimate. Sales of 448 versus 409 million dollars. So a beat and a beat for the third quarter. As far as Q4 guidance, weak on the EPS. They guided a loss of around 10 cents per share versus a 1 cent gain estimate. Sales all came in higher. So mixed on the guidance, beats on the earnings. How does that come out to you this morning?
Look at that opening bar after the earnings, Joel. They slammed it down to under 290. They bought it up to 315. They just showed you how to lose all the money on the spread. And obviously it's settled in and gone nowhere. So you're selling the dip, you're losing money. You're buying the rip, you're losing money. Hey, look at that. And obviously it's come right back and it's just settled in. So I don't know which direction it goes from there, but when the stock rallies $15, it sells off $15 all in the same candle. I mean, craziness.
Talk me out of shorting this one.
You want to short TWLO?
Yeah.
I don't know. I don't see what you're looking at from the short. I don't really see a long setup or a short hit. So I see the dip overall in the last 3 weeks. So I would not want to be selling this because I'd be selling the dip if I'm looking at it from a 90-day perspective. So that's how I would talk you out of it. The low of the move is 287. That was coincidentally, I think, the low last night on the earnings as well. So big support down there. Short away if you want, but not for me.
I'm just thinking because it's just not ripping up. You know what I mean? Like there was probably pretty high expectations, right? I think you had some you had some big money selling into the. I did the 50% wrong. It's a little bit higher than that. Big money sold into the report. It's just not a lot of people just sitting on tons of profits here, and it's like, oh, is this going to go up $18? Oh no, it's only up $1.13. So I don't know. This one, I'll keep an eye on it. I would love if I could have done the 50% retracement a little bit better. I could give you that. I don't think we're going to see that. See if it goes red. That would be, or maybe I'll watch it for a day and see what happens.
I see no trade here.
No trade. Okay.
No trade.
No trade.
No opinion. No trade.
How about where are we trading at?
Let's go to Harley Davidson, which is getting a
321.
huge pop. HOG getting the big pop, up 10% on their earnings report. They must have blew it away. I haven't looked at the report.
Driverless motorcycle.
The hog. Everybody's riding motorcycles.
The numbers are
It's hard to get COVID on a motorcycle because you're riding by yourself.
No, some people ride with people.
Well, yeah, but then it's their wife, so you're already exposed to, the wife. Maybe the husband rides in the back, the wife drives the motorcycle.
3250 is where you got to on this one. Whoo!
What's the numbers?
The numbers were so good that you almost wonder if they don't compare to estimates for some reason, because the EPS was $1.05 versus a 28-cent estimate.
Some one-time stuff in there?
Maybe. Sales of $1.17 billion versus $862 million.
Wow.
They blew away the numbers. We'll have to ask William when he's on in a few minutes about the automation in the motorcycle business.
Good numbers. Harley Davidson. It's Harley Davidson. I cannot buy Harley Davidson. It's $15 back in March. It's come back. I mean, you have this whole, we're going outside. We're doing outdoorsy things because of COVID. So we're going to buy motorcycles and ride them. That probably helped. But it's still Harley Davidson. And this stock's been in a decline for, I feel like, forever. You go back to 2014, it was $70. So there's a clear downtrend here. What do we do on stocks and clear overall downtrends? We sell reps. So not for me. If I owned it, I'd sell it.
I'll just use the pre-market range in this one since it's so, it's such a big move for this stock. Way over its average daily range, street leading the wrong way into the report. But that might have been some market dynamics. What I'll do on this one, I'll just go a little bit longer term and I'll just look at this. I'll draw on the monthlies here. I mean, you had some major monthly resistance. Just call it $30. So if this came back into 30 and held, then I just technically speaking, then that's a breakout, but I'm not chasing it up here at 31.80 up a decent volume. If you're long to 30 calls, baby, you want to see that 32.50. I don't think we'll see it. I don't know. For some reason, I don't think we'll see it.
I think
But
it's overhead supply. I don't think it's going to rip.
yeah.
I mean, there's room to 35 on the charts. There is room. So I don't think I'm necessarily coming in and shorting it, but I don't just see this thing ripping and continuing to go. And eventually we're all getting back on the Harley Davidson bandwagon. I just don't see it.
All right.
It wasn't hot before COVID. So
let's do just real quick before we do earnings. People are asking about DKNG and undercut and rally. Dennis, what do you think? Are they shaking you here? Or are you
I'm in
gonna
it. I don't like that. That was an awful candle. So yeah, they are somewhat shaking me here. I mean, you're trying to call a bottom. The stock is in a downtrend. I probably shouldn't have been, bottom pit. But I talked about that $40 for so long on the show. I almost felt like I had to buy it. And when I went on vacation, I was up $1.50 feeling good about it. And now I come back from vacation and you guys murdered it on me. So I'm down in the DraftKings. It's up a little bit here this morning, so I'd be getting close to back to even. I think I'm at the 41 though.
You couldn't even wait.
Couldn't wait what?
You said you bought it. You buy it at 40.
And you bought it at like.
I know 41. I bought it too early. I was like 41 handle. I paid. Yeah. I couldn't wait for the 40. I was too excited. I got all excited.
Yeah, I'm gonna buy it.
You know what? But look what I'm doing wrong here. I'm trying to buy a stock that's trending down, trying to call a bottom. All those things I say don't do. I kind of did it here. I kind of broke all the rules here. So, I mean, you can break rules and sometimes it works, but more often it doesn't. I'll probably lose money on this because I'm trying to break all the rules. I'm not buying a stock that's in a clear uptrend. There's definitely not an uptrend broken here. I'm trying to buy a stock because I feel like I had old support there, and those don't work that well. They give you a little bounce and then they don't. I mean, is there a story that could potentially get hot here? Sure. I think I've screwed up honestly by being long this thing. I probably will dump it.
You know what? I played the catch-up trade in Penn a little bit on the short side. It was quite the tussle. But I just figured, it would come in a little bit. It went down to that 59.10 so quick yesterday. I mean, I batted an eyelash, and then the thing comes back up. It hits 59.10. Then it goes back up over 62.50. I mean, it's
a wild stock.
Yeah, it's hard to hold that one. That's
a wild stock. Oh yeah, that opening candle I see it yesterday there. It's wild.
Yeah, and I'm like, woo. Actually, I covered a little bit on the open. I'm thinking, oh, that was horrible when it went to 59.10, and then it goes to 62.50. I'm like, I'm a genius. And then I don't know, it's just a hard stock. I mean, these just moved all over the place, but we'll see. I don't know if the downtrend, I don't know if the sell-off is done yet in this one. We'll keep an eye on the close. Very, very small part of the position left.
I sold mine at 60. I did a good job. 69 on the pop because I just felt like it was going to have a DraftKings catch-up trade happening here. And it got up over 7. I sold it before it got up to that 72. So I sold a little bit early. And then, it's continued to leak here now. I think it continues to leak. I think you want to be a seller rallies in the pen right now. I still think there's a story here longer term, but that story has cooled off substantially. Portnoy's gone back to sports. You can think about even like the Portnoy trade. You used to hear Kramer talking about him 5 times a day. I mean, you're not hearing that much about Portnoy now. So, I mean, that whole aspect's cooled off too. The Barstool Sports is still their thing. And obviously Portnoy's huge, but you're just not hearing as much from the stocks perspective. So I think the Portnoy trade's cooled off for a bit. Could get hot again. We'll watch it.
GAN just settling in here. Boy, that was sell the news.
GAN. What's GAN doing? Look at that. Again, it's a stock in a clear downtrend. Well, you sell the news when you get those pops. This stock is ugly. I'm sorry. Hey. I know a lot of people own GAN. It's got one key level it needs to hold. That's the 14.25 low from September the 25th. And if it takes that out, it's got trouble all over.
Spencer, when you
don't even people caught in this. Like, it's hard to be long. It's hard to make money on these ones that everybody's caught long. They're all caught long. Stocks in a clear downtrend. Rallies are being sold. Rallies on good news. The news, whatever we had back on October 5th, quickly sold that news. It's telling you if you're long, you're probably on the wrong side of the trade. I have no reason to be long GAN. Really, I should not have DraftKings either. So these stocks are in clear downtrends. Don't want to be long stocks in downtrends.
Look at Spencer. You dumping your AMD at 85 here? That's yesterday's high.
I don't know. I don't own AMD. I don't own AMD.
Look at that. Ooh, look at this. That's one hell of a
You had my spread written off here this morning, Joel. And you know what? My spread is back on AMD. They've decided they like this merger now. That's the thing, though. When you're buying stocks, AMD, and if you bring up the long-term chart, you can see it's in a clear uptrend. You get the pullbacks on the stocks and the clear uptrends, they're often buying opportunities. And now all of a sudden, sentiment has turned. It's like now they're trying to find ways, and the media will say, well, this is going to be, this is the greatest deal for AMD. And it's not surprising it's trading up because they'll try to justify the price action, and then that'll push it further. So you know what? The AMD here, and now that it's went green by $2, I'd be a buyer of pullbacks. And I'm long the call spread. I should have said that earlier. I'm still long my call spread in AMD. 8,100.
I lost money on the $2 calls in this thing. Back in. I guess I should have rolled them over. Remember
what
when
$2
saying,
calls?
Oh, remember when this thing was $1, $2, $1, $2, $1.
Oh, you're talking years ago when it was $2.
Yeah, I guess I should have rolled them.
It stayed at $2 for like a decade.
I know.
I went to like 3 or 4, and I was like, that's got to be a selling opportunity because AMD is always $2. Wow. Turnaround story.
For sure. Lisa Sue.
Sue turned this whole thing around.
I still haven't figured out whether or not.
It's not the same person. It's not the
Come
same
on, it has to. I guarantee.
The person he went to school with.
No, not school. She was my clerk when I did the S&Ps against the missiles.
Okay.
The major market index.
I'm bringing on our guest.
I swear.
William Studebaker is the CIO of ROBO Global. Is going to hopefully bring some sanity to this show.
We need sanity.
William, good morning.
Good morning. How are you guys?
Good. We hear you, and can we see you? There we go. All right. Wow. Where do I start? Okay. ROBO Global has a few ETFs. You've got the ROBO, the HTEC, and then your newest one, which I guess is only a few months old, is your THNQ. That's your artificial intelligence ETF. But we've had you on the show before. ROBO Global is, I guess, your first and the largest ETF that you have. Ticker is ROBO. Tell us about that and sort of how that's changed this year with the pandemic.
Yeah, well, I would say that as a result of the pandemic, we've only seen acceleration in all the adoption and usage of the technologies. When we launched ROBO 7 years ago, we had high conviction belief that robotics and AI were disruptive technologies that were going to change the way we live and work. Well, fast forward 7 years ago and throw on a pandemic, and this is all but a certainty. Companies all over the world have to use robotics and AI to optimize their business. I mean, it's really adding business agility. Merrill Lynch now estimates that the AI market itself between now and 2025 is going to triple in size. So we're pretty excited about it. ROBO hasn't really changed all that much since we launched. The biggest change that we've seen is we continue to see a lot of acquisitions. Obviously, AMD is buying xilinx. ROBO we launched 7 years ago. We've had, I believe, 12 acquisitions and probably another 12 or 14 attempts that were rejected by shareholders. So I think that interestingly enough, for robotics and AI, we sort of have an opportunity set in a public equity wrapper that really is more of a venture capital kind of play. And while I'm not going to predict when and where these happen, I do think that the opportunity set is pretty rich here and it's only growing. So real positive.
I'm curious about the HTEC, the Healthcare Technology and Innovation Fund, because this is probably the year of all years for that. And if you look at the performance of the fund year to date, you'll see what I'm talking about. It's up like 30% or something like that. But I mean, what is in this fund and how is it sort of helping this crisis?
Okay. Well, actually, the fund's up close to 40% and probably 50% the last 52 weeks or so. I think all you have strong appreciation for how e-commerce has sort of exploded onto the scene and how e-commerce is not just a luxury anymore. It's a necessity in business. We were studying a lot of the end markets that were going to be affected by robotics and AI. One thing that really caught our eye a couple of years ago was healthcare. And we sort of looked at it and said, what is healthcare? It's actually not healthcare, it's sick care. 20% of our GDP is spent on healthcare. That's unsustainable. Not to mention, all we do is go and react to a problem. So that's what the pharma companies do. The biotechnologies are sort of reacting to a problem. They're not necessarily trying to cure something. They're trying to maybe just slow it down or maybe arrest what might have happened. That seemed sort of errant to us. And so when we were thinking about healthcare, we wanted to think, what is the future of healthcare? Okay. For us, that's the world of prediction, prevention, individualizing medicine, sort of in essence, extending human longevity. So if you look at most healthcare structures, take, for example, the S&P Healthcare Index, it's heavily invested in pharma and bio, and then you have some services and medical instruments, and less than 25 or 30% of ROBO would be in the S&P Healthcare Index. So similar, to HTech would be in S&P Healthcare Index. So what we had to do, similar to ROBO, was go and classify the healthcare industry. So we did it very differently than the healthcare community. So we sort of looked at, again, the future of healthcare. The sectors that we looked at: prediction, prevention, genomics, lab process automation, data analytics, telehealth, robotics, medical instruments, to name a few. And that's what we see as kind of the future of healthcare. And, regardless of who wins the election, it's great that the performance has been interesting this year, but we're not even in the first inning of the baseball game in healthcare. The players in their locker room putting their clothes on. There's going to be trillions of dollars of economic value up for grabs in the years to come.
Quick question here. I mean, a lot of money is going into the vaccine and the potential cure for COVID-19. I mean, is the dollars being put into it? I mean, the stocks have these huge price fluctuations, added. Do you think that actually the companies that do find the cures or the vaccines, is it going to really, some of these companies are pretty big. How much is it going to add to the bottom line of some of these individual companies?
Yeah, I guess it depends on the individual companies. There's a lot of good news, priced into it. There has to be, a lot of execution that will have to come after, not only, with the science, but also just in contract manufacturing, et cetera. So I can't, speak to that in a broad sense. You have to look at it from an individual company. But I do think that one thing that's very different now than ever before is advances in AI, machine learning, and deep learning have allowed us to get to this point that we would never have had a chance 2 years ago. I mean, there are roughly 140 vaccinations in review. I think 35 to 45 are now in human trials. I mean, the fact that Moderna within 42 days could go from virtually a concept to human trials is unprecedented. And the ability where our computing power is doubling every 18 months, and our cost of computing is plummeted, is now, given an array of use cases that was only, a couple of years ago, Elon Musk science fiction. So I think that we have so much innovation, coming in healthcare that it's going to be really exciting, and investors better get a foothold here now.
William, I'm just curious, with everyone's attention sort of turned to the pandemic, is there an argument to be made that progress and innovation on this front has just temporarily slowed with regards to everything else because everyone is so laser focused on this one thing?
Oh, I don't think so. I mean, I think innovation is exploding, everywhere. I mean, I live in the Bay Area, and you can see, where the innovations are happening. I mean, you've got unicorns that are sprouting up, everywhere. The FANG companies have been an incubation hub for really the world. And when you look at what happened just with the pandemic, I wrote a blog kind of in March when this began. About what was changing. I said there's 3 waves that are coming. For one, we have the benefits of some e-commerce, but that's being accelerated because we need to socially distance. You want to order products from Amazon, not because you want it in weeks or days, but soon to be inside of hours. It only comes to automation. Then we have new ways of institutionalizing, business, right? Telemedicine, in terms of a technology, went from the outhouse to the penthouse virtually overnight. It took Teladoc, which is now kind of a household name, 10 years to get to 1 million virtual care visits. They got to 1 million virtual care visits a couple quarters ago. The prior quarter, I think 2 million. There's companies in China like Ping An Health and Technology, which some of your listeners probably aren't aware of, but they do 700,000 virtual care visits per day, not per week, not per quarter, not per year, per day.
Wow.
So again, this is changing. There's 65 different companies now working on various remote work technologies. So I could probably go on and on, but innovation is flourishing everywhere, not just in the U.S., but globally. And so I think this one is so much more profound and different than revolutions ever before. And AI is proving to be one of the most disruptive forces in technology, maybe ever, but certainly in decades.
William, Dennis Dick here. Just a question here. You're talking about innovation. How much does social media have to do with the innovation that we're seeing today? Because you just think like the information age, the sharing of ideas. Somebody sees something and then thinks about something else. I mean, you look back like 30 years ago, and it's like you get in the newspaper and you're hearing about other stuff. It's like here, like there's so much, information sharing. Does that not just continue to, spur innovation like for, the foreseeable future here because of the information?
I think so. That's a good point. I mean, I think this is just fostering more collaboration and more efficient collaboration. And simplistic, when you think about, right now globally, there's maybe 4 billion or 3 billion smartphone users. It's anticipated in the next 5 to 7 years, we're going to bring on another 4 billion people to have access to the internet, and they're probably going to be doing it through mobile devices. So you're bringing on another 3 or 4 billion people that are smart, that have access to information, that have access to technology, that are entrepreneurs, and oh, by the way, are consumers. So we kind of have this, melt up situation that's taking hold, and this is pretty profound. And when you look at a lot of investment in robotics years ago, the problem that you had is that, say for example, you're Stanford and you were given a $100,000 grant to go, produce a robot that may, clean your clothes or clean the table or whatever it was. And, maybe there would be some advances, but typically what happened in a lot of robotics is that you ran out of money. And so when you ran out of money, the whole investment sort of collapsed. Okay. Mm-hmm. And now with robot operating systems and open architecture, it allows for the continuous sharing of information. So when you used to start a technology at the ground floor, now you're starting it up here, okay? And everyone has access to information, you're building on this. And so, years ago, would it cost hundreds of thousands, maybe millions of dollars to build a technology? I mean, some people can now do it, on a shoestring budget. So this is just, sparking, more and more innovation.
William, I want to ask you about like one facet of automation. I think a lot of people might hear that and think of self-driving cars, right? And we joked earlier on the show about self-driving motorcycles, but Robo has minimal exposure, I think, to the self-driving car space. And if I'm wrong, please correct me. But I was doing a quick look at the holdings, and that's what it seemed like to me. Can you just talk to us about the development and in self-driving cars and automation in that space, and sort of how the fund thinks about that, or the index, I guess?
Yeah, that's a good question. Fair question. I actually kind of have a different view than you do. If you look at, inside of Robo, if you add up computing, processing, sensing, AI, if you will, it's about 25-ish% of the index. And those are the companies that are helping to create the algorithms, okay, and providing the technologies for autonomous vehicles to work. Now, we don't have autonomous vehicles as a subsector. Why? Because there's no business case for one yet. Okay, when you talk about mobility as a service is likely coming, and as that happens, we will and can adjust to take advantage, for that kind of situation. So, as business cases and use cases evolve, our index will evolve.
Yeah. So just still early on in that game is what you're saying. But to your point, I guess, because I looked at your holdings and I didn't see any, obvious automaker names. But I guess your point is that these are the names that I wouldn't know right off the top of my head that are actually making the technology. So yeah,
but I mean, the auto companies, are using automation to enable their business.
Right.
They're not using it to profit from it.
Right.
So there's a big sort of distinction. So we can't, for us to have hey, robotics, automation, and the AI index, and then put auto companies in there, I think most people will go, what the heck are you doing?
Sure. Makes sense. Makes sense. William Studebaker is the CIO of ROBO Global. Like I mentioned, there are three funds or indexes and funds based off those indexes. ROBO, HTEC are the two that were out prior to this year. And those are the ones we just talked about. William, thank you so much for the time today. And we definitely have to have you on next year. Talk more about how this space develops.
Sounds good. Thanks, guys.
All right, 850 here, 851 now.
We're fading. We're on the fade here. What and it really wasn't durable goods. I think it was, what was it there? When
we're just chopping around still.
Yeah,
I mean, we had such a candle, such volatility yesterday. We're going to chop around, and it's unreasonable to think we're just going to get back all of yesterday's losses, you know, on a snap of a fingers here. Did some technical damage yesterday. I mean, there's a lot of stocks that are broken. So, you know, we've been doing some technical damage. I mean, we never made new highs. You know, that's the other consideration here too. Like, just look, you know, to the run we had in September when we thought everything was just, you know, rosy. And then we had the 10% correction in the NASDAQ in like 5 days, one of the quickest corrections, if not the quickest in the history of the NASDAQ. And, you know, we didn't make a new high on the move. So that is somewhat concerning that we did not make a new high. So technicians would say, okay, well, you got the potential for a double top up here now. When you look at it from Amazon, when you look at it even from the Qs, when you look at it from SPY, we could not make the new highs. So there is some technical damage here. That we have an overhead supply issue here as well. So I think it's chop is the name of the game. Buy the dips and sell the rips. This isn't just a buy the dip market. Like I said yesterday on the 3:30 show, this isn't the kind of market where you just buy the stock and look at it in 2 months and you know it's going to be higher. This is the kind of market that when you got the gain, you take the gain, because otherwise the market's going to take it away from you. The fade trade is working really well. I love this kind of market because I'm a natural contrarian. I think you do too, Joel.
Yep.
So I like the chop. And, you know, it gives you lots of opportunities to buy the dips and sell the rips.
What if you're, I mean, and I'm in the back of my mind, and I'm thinking about what if you manage like huge money, you know, like big dollars, not just, you know, our portfolios, you know, headed into the election. I mean,
yeah, you got it. Well, and we got to put together these Biden portfolios, you know, and we got to talk about, you know, if the potential that Biden gets in, the potentially doesn't get in. You're going to see big moves in green, you know, the Biden's the green energy trade. I mean, we've seen that in solar. You can look at TAN, and as Biden, you know, has, you know, obviously shown strength, you can see TAN has been straight up, you know, as it looks more and more likely that Biden is going to be elected. I had a little weakness in the last few days, so it's probably profit taking to a certain extent, but we know, you know, from a market's perspective, that Biden is more concerned about the environment, and the green energy trade is going to, you know, is a potential Biden trade right there. And there's a lot of other ones too to consider. And, you know, and then you got the cyclical trades, you know, is he coming in? But, you know, we should be talking about, and maybe Benzinga can do that if they haven't done it already, start to look at Trump stocks and Biden stocks.
Yeah, I mean, there are definitely trades to make. I wouldn't go so far as to say there are investments, because if you look at, you know, energy, the Trump administration was supposed to be super favorable to energy, right? But there are other forces at play. If you look at TAN, go back to 2016 and TAN, an administration that isn't exactly
and it's still done well,
super favorable to this sector, and it's still done well.
But you could argue though, so Trump got in, TAN was $20.
Yeah.
And if you look for the next 3 years, it really went nowhere. And now, you know, it started obviously with COVID, you know, had the little run the beginning of 2020, maybe as you're thinking that Trump's probably maybe not going to get reelected. So you could argue that it has been held down for the majority of Trump's presidency. Well, and now that it looks like he's not going to get in, and we don't know, we're not politics, we don't know whether it didn't look like he was going to get in with Hillary either, and then he got in, so you can't count Trump out. But, you know, as the markets, you know, continue to look at, you know, the potential for a Biden presidency here, TAN has benefited from that. So I would argue with you that I think TAN was held down due to Trump.
So yeah, maybe there was like a trade though. But if you look at like the XLE, right? Wasn't Trump supposed to be great for energy, great for coal, great for all these traditional?
Oh, it's steel. How about steel?
Yeah. I think you just can't fight those. There's the secular decline there. You just can't fight it. I mean, it's the move away from oil. I moved the electrification of cars. I don't care who your president is. The electrification of cars is not good for oil companies. Like, it's trouble. And that's why, we've been bearish oil on this show for, I feel like, forever. And I think we remain bearish because, I don't care if even if Trump gets back in, you're right. Maybe you get a pop in some of the, the not so clean energy plays because, Trump isn't going to be as rah environment. But even if Trump gets in, does that mean you just go along all the oil stocks? I think this, there's an issue here with the electrification of cars.
The same thing goes for the banks. I mean, regulation has been rolled back. Dodd-Frank has been rolled back, and banks haven't exactly lit the world on fire. So
they did, though. You look at Bank of America and JP Morgan. They did. I mean, 2016, JP Morgan was $60, $140 it got to beginning of 2020. So COVID. Now, the banks were doing very well through Bank of America went from $15 up to $35. So basically in the 4 years, 3.5 years of Donald Trump's presidency, the Bank of America and Citigroup, they all went straight up. COVID destroyed those.
Okay. Here though. I'm looking.
So I'm arguing with you here.
I like this.
I'm saying it matters.
Dennis, I'm glad you're just not arguing with me. I'm glad you're arguing.
I always argue with Joe. I'm picking on Spencer now.
Yeah. Come on, Spencer. Come on.
Yeah, the XLF made a move after Trump was elected. Okay, it made a move. It got up to like $21. That was in November. That was after Election Day, November 2016. $21. Okay, prior to COVID, it was at $31. So, is that really so great when you compare it to tech and other sectors?
Well, no, and it's not
21 to 31 in 4 years.
Yeah, but you're not investing in tech when you're investing in banks. You're not expecting returns of 110%. I mean, it's just the tech revolution. There's been no place like tech. This is why the U.S. stock market value is 54% of the world's value is because we got Silicon Valley.
It's only 53.
I mean, it's all been 53. It's all been technology driven. I mean, everything is technology driven. This is old industry. I mean, the banks, you think about what technology is going to do to the bank's margins, even if you think about, even think about brokering a deal, like a real estate deal. And, I just sold a house. My real estate broker is taking 5%. I mean, is that going to be the way it is 10 years from now? I'm going to say, the real estate brokerage industry is where the stockbrokers were back in the 90s. I mean, you're going to see those spreads come in too. I don't think it's going to cost you 5-6% to sell a house. I know there's ways to go around. You can get around that, but for the most part, most real estate deals are still done through traditional real estate brokers, and it's still getting those spreads. So I mean, the banks are the same way. I mean, they're making big money. And those margins are getting squeezed, and those businesses are going to continue to get squeezed over the course of the next 10 years as technology and better ideas. Rocket mortgage, comes and obviously harms banks too, because they're not getting the business because you got a rocket mortgage coming in. So there's going to be competition coming all over the place. So I just think the banking industry is in secular decline as well as the margins continue to get squeezed. And then you have the whole bad loans for COVID. And it's so makes me not want to invest in banks.
So just to bring it back though, full circle, I'm not saying there won't be trades. There will definitely be trades to make if Trump wins or if Biden wins, right? But
what about weed?
But when it comes, yes, that's an example of one. But when it comes to like longer term investing, if you're like, there are other forces at play besides who's in the White House, right?
Yeah.
That was my point. So
that's a good point. And there's always that, on any given day, the stock has so many different forces, what's going to be the driver. We know when we get to election, it's going to be the presidential. It's going to push it in the short term. But what's going to determine value? It's a good point you're making, Spencer. In the long term is the company's overall fundamentals. And, and you look at the overall picture of the oil industry or the banking industry, and it's like, where is the light at the end of the tunnel for the oil industries? I think the light at the end of the tunnel for the oil industry is a big train, and it's going to smack them, and we're going to lose a lot of companies. There's no coincidence that you're seeing Parsley Energy get bought by Pioneer for no premium. And, they talked on that deal and they said this is maybe going to become the norm, these no premium deals, because these companies aren't doing it, to, grow the businesses in a lot of cases. They're doing it to survive. They're trying to lower their cost of break even because they know oil's not going back to $100 a barrel anytime soon. So if you're sitting there with your scratch at $60 on a barrel of oil and it's trading at 35, you got problems. So they're being smart about it. So there's going to be more consolidation. We saw Husky, consolidate with Synovus, I believe it was over the weekend. I don't know if you guys talked about that on Monday, but you're going to continue. Canadian merger, Husky and Synovus, two Canadian big oil companies there merging out of necessity as well. I think you're going to continue to see consolidation in this industry, and it doesn't make them good investments because you're seeing these stocks get taken over for almost no premium. I mean, the Parsley, if you were long Parsley, you got to be epically disappointed that, here is a potential, and Kramer had talked about this as being a potential target, and they get no real premium in the deal at all. I mean, this is just showing you the trouble of the industry, and they got to consolidate to survive.
So just the merger was done at the Concho Resources and ConocoPhillips. Yep.
There wasn't much premium there either.
No, and I think they've gone down since then. I'll have to take a look at the chart. But
it's like Conoco's making new lows. ExxonMobil. I mean, you've got stocks sitting there with a 10.43% dividend in a 1% or 0% environment in some cases. I mean, the TLT is a good tell. It's yielding 1.47. You got ExxonMobil yielding 10. I mean, some people say this is a no-brainer, but I think it's the no-brainer to not own it because it's telling you that dividend's not safe. Chevron, Exxon, I mean, these stocks are these are the best in breed, Chevron and Exxon, and they're in the decline. If oil prices bounce back, there will be opportunities, and it's going to be rallies. But I think those rallies are all selling opportunities because I just don't see until they can turn, and maybe Chevron and Exxon, maybe they can figure it out and go full green energy, and they can transform their businesses. But as long as the primary source of their cash is from oil, I think those stocks are going to be in a world of pain.
Right, so just real fast here.
What's going on with the market, Dennis?
Sell the rip, buy the dip. Okay, that's the name of the game. We had a rip this morning to be sold.
All right, I mentioned this yesterday that Kroger has an investor day today. They just reaffirmed their guidance. Bed Bath & Beyond has an investor day tomorrow, so keep that on your radar today and tomorrow. There'll be more headlines from Kroger throughout the day, so have that one on your radar. I know we need to get to cover as many earnings as I would have liked to.
We didn't even do Lilly.
I wanted to do.
Want to do Lilly?
I wanted to.
Yeah, do Lilly. Joel wants to do Lilly.
No, I mean,
let's do Lilly.
We need a 3-hour show. I mean,
Lilly, Merck, Pfizer, same time. Bottom line is Merck, Pfizer beat Lilly did not. That's the bottom line for those three. They all reported this morning. LLY is down in the pre-market.
Dennis, you had to hate on for Lilly when that thing popped over 150. I mean, there's just
stock that's been in a decline for a bit. It's not rocket science. They start to break trend. They have the rips and the stocks and the downtrends, and they're selling opportunities.
You still got that Lilly, or did you get out of that completely?
Short? You mean
no?
Short?
You were in your long-term portfolio. I know.
Oh no, I sold Lilly years ago. So I bought Lilly because I just believed in the drugs. This was back in like 2011. I bought it at I think $25 or $30, and I sold 80, 90. I think I was all out even under 100. I sold early. I mean, it went to 170, but it was still an excellent investment for me. I tripled my money, I believe, in the course of like 4 years in it. So obviously it continued to go higher, but I mean, all these drugs, they're fully valued. These aren't cheap. I mean, the drug companies, you can look at them and say, a lot of these are trading with, pretty sky high multiple still. I don't know where the Lilly multiple is, but when I bought that, it was trading with a multiple like 5 or 6.
There you go.
Now it's trading with a multiple of what? Probably like 20. I don't know where it's at.
If you want to cover a short, 132.98. That was your low in April. Ooh, that's not good. We're getting back to those levels near the March low. What was the March low in this thing? Did that actually go lower? Let me see the monthly here. What was the low in March? Low in March, 117.06. No, not in danger yet, Will Robinson, but I don't know, 132.98 could come into play. That was your April low.
All right, I know we didn't get to tickers from the chat. I saw Chegg, I saw ATVI. I will cover I'm going to go through, write them down. We'll cover these at the 3:40 p.m. Show.
Microsoft tonight. Don't forget Microsoft.
How about AMD? I hope someone listened when it got near 85. Did you
look
see
at all the dips and rips to buy and sell here?
Jesus Murphy. Look at that. Almost got to yesterday's high. Eh? Kaplooey.
Where did it get to? 85?
It almost got to 85 when Spencer bought it.
76, 85, wild range. They can't figure out whether they like it or they don't. I
Went
mean,
to
now you're getting a little
84,
more of a
85.
dip. So
Yeah.
maybe, or this is risk arbs in here now too. So obviously you're going to see xilinx follow. I'm going to be excited. I'm going to make some money trading this deal.
All right.
All right.
Buying and selling.
If you liked having Dennis back, hit that like button, hit that subscribe button. Dennis, we missed you for one day. It's good to have you back. Like I said, we'll cover all these tickers, as many of them as we can at the 340 show. I want to thank our guest today, William Studebaker. Thanks to all of you in our chat. You can catch a replay of this on every major podcast platform, Spotify, iTunes, Stitcher,
Netflix.
et cetera. Not Netflix yet. Email us, PreMarket.
Let's get on Netflix. Why aren't we on Netflix?
Right. We got a lot of people on Spotify. Put a 1 in there if you found us on Spotify.
There we go. Email us, premarket@benzinga.com. And please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a good rest of your day. Good luck. Be safe. We'll see you in the afternoon.